Hi YouTube, please give me a moment while I go live on Facebook. It'll take me just a second. And I should be live on Facebook. Hi everybody, welcome to our weekly edition of the Strategic Swing Trader. I'm Sami Abu Saad, Director of Education at T3 Live. We're going to go ahead and get started, but before I do, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. While you're viewing this, I'd like to say if you find benefit in today's video, please be sure to hit the like button. Also beneath the video, you'll see some helpful links if you'd like to check them out later. Okay, but without further ado, let's go ahead and get started. We're going to switch on the charts and take a look. Alright, so the market had a couple of pretty big red bars last week. And now we're coming into the rising 20. I think we will probably break a little bit below the 20 before we get a bounce. Now, was this the top? Only time will tell. Who knows? Honestly, it's not an easy call. It's probably for sure a temporary top. Okay, at least a temporary top. But was it the top for months to come, forever? I don't know. It's not an easy call. Based on the size of the red bars, I think we probably go below the 20 a little bit before we get the bounce. And the bounce that we get will tell us what to expect going forward. If we don't get much of a bounce, or if we get a very weak reaction, like we bounce a little bit and then immediately get sold, then that will give us more information. That will tell us that the market is actually, this is a real top. It's not just a pullback. But if the market comes roaring back to the highs, then you would know that this wasn't, this was just a pivot, a pullback, and we're going back up. Does that make sense? So let me say that one more time real quick. Based on the reaction or lack thereof, that will tell us whether this was a real top or just a pullback. So let's see what kind of a reaction we get next week. It should probably come early in the week, like maybe on Monday or Tuesday. I'm expecting more like Tuesday or Wednesday. And then if we get a big bounce, then we would know that this wasn't really more than a normal pullback, a normal healthy pullback. If we don't get much of a bounce, or if we get just a small green bar and then continue lower, then that means that would mean that the market topped out, at least for the time being, for the next several weeks or months. Really, in a strong uptrend, prices bounce off of the 20. That's if they reach the 20 at all. So if we go back and look back here, we didn't even pull back to the 20 ever. Well, we did here. This was a pullback to the 20. This was a bad tick. It's never really happened. Notice off the 20, we didn't even reach the 20, right? On this pullback right here. Over here, we did pull back to the 20 and bounce off of the 20. So now we're almost back to the 20 period moving average. But based on the size of the bars, I do think we have one more day down. And then maybe we get a bounce. But we'll see. A lot of my swing plays trailed out, unfortunately. But some of them reached target also, so no problem. The one that I wasn't sure, that I hated getting trailed out of was the TNDM, because I liked it to 110, so it still had 20 more bucks, but I got trailed out to under 87.15 is where I put my trailed me out by just a little bit. If the market continues lower, it probably pulls back, but it might, if the market goes back up, it might have been just a shakeout. So I might have gotten shaken out. I really shared this with you before it triggered as a 1, 2, 3. It was a really nice play, but I may have gotten shaken out. Only time will tell. Okay. All right. With that said, I'm going to go ahead and look at the swing watch list for Monday. I'm actually going to be out next week, most of the week. because I'm going to be running an in-person mentorship class with students in person here in the Bay Area. So I'm not going to be available to do our weekly video on Tuesday that I do, but be sure to check last week's lesson if you didn't attend last week's lesson, because it was one of the most important lessons that I've ever attended. I'll drop a link, I'll add a link to it in the description below, okay, below the video. Later on, once I'm done, I'll add a link. Let's take a look at next week's list. We have a few breakouts. Look at CN, gapped up back in December, and it's been basing at the top. Tell me this is not bullish. I mean, it's super bullish. Not only that, but it broke down here and didn't follow through to the downside. The breakdown turned out to be a breakdown failure and went right back above the 20 and is basing at the highs. My goodness, this is bullish. So I like this yen higher. It's not a very tight base for sure, but it looks higher. It looks higher also on the weekly chart. Check out that weekly base breakout. Monthly, I just want to take a look at the monthly here real quick. Monthly is good, all out bullish, rising 20. CN looks like it could go to here, at least to $50. So I really like the CN as a long-term play. What I don't like about it is the sloppiness of the base. I would have liked it more if it was a slightly tighter base. So that's the issue with CN, but I still like it higher as a breakout. INFN looks similar, but CN I like a little more. So as a breakout also over the base. CON is different, is a transition A. CON was one of the nicest plays that I did as a swing short early this year. See it right here, 1, 2, 3, short, stop right here, and then I just kept riding it all the way down. I did get shaken out right here. I did get out right here, and then it continued lower, but I did get out right here. It was a beautiful play, loved it as a short, and now I like it as a long, as a transition A, that curl. So that's not bad. Look at the weekly, that's pretty good too. It's a weak stock, but all climactic sell-offs are basically weak stocks, right? So that's not bad. INSM is a daily buy setup, a daily pullback after pro gap up. Rising 20 is not quite there, so I'm personally passing on it. If you're in the strategic swing trader as a subscriber, feel free to log on to your account and you will see which ones I decided to go with. The NG is gold, and gold has been just on fire. Here's GLD. I mean, it's just been on fire. It looks higher too. Remember who called gold on June 1st of 2019? Yes, sir, I did. There's a video for it. Also, if you want to go back to June 1st, 2019. Gold reached target 1 already, but target 2 is 174.50. So right here. Looks beautiful, really, really bullish. Multi-year high. You'd have to go back to 2013 basically, so it's to see higher prices. So it's a 7-year high actually on gold. Looks higher still to 174. So NG is gold. I like it as a breakout. Don't love it, but it's just really bullish. NG. STE, all of these plays are breakouts, it looks like. Look at STE. Market crashes, sort of, the last couple of days. STE bases at the all-time high. Oh my god, this is bullish. I have the same exact pattern on the XLearn, XLRN. STE is medical devices, XLearn is biotech. Between the two, I like XLearn more because moving average is getting closer and closer. It's been basing also for quite a bit longer, so less likely to get shaken out. When it's a short base, it's easy to get shaken out. But these two are beautiful. Love them. STE, love their relative strength. And XLearn, both breakouts over the base, stop under it. That's all there is to it. And TSG had a weekly buy setup. Let me show you the weekly chart. Isn't that a beauty? That weekly buy setup? Beautiful. Just so beautiful. I didn't catch it. It actually triggered on earnings. It reported earnings here and gapped up. But it has a 1, 2, 3, 4 pattern right here. So this is 1, bar 2, bar 3, and then tomorrow, if it takes out 25.42, it'll be bar number 4. So that's called the 1, 2, 3, 4. Target would be the prior high right here, the weekly pivot. So right here, 26.50, I think. Okay, so those are my long ideas for Monday. Here's my short ideas. I got column as a short. It's a sell setup, but not only a sell setup, it's also a monthly kind of transition C. On the monthly, don't love it that much, but on the daily, it's pretty good. To $80, that would be the target. So about 10 or 11 bucks on the column short. Again, daily sell setup. Short would be right here under the bars, under the base. So if you want the exact number, it would be under 90, 15, 16. Stop would be 91.65. Target about 80 bucks on COLM. CRNT is also a similar sell setup. Right here short, stop above the base. It's $1.92, but I've seen $1.92 stocks or $2 stocks, $1 stocks go down to 1 cent, 5 cents, 10 cents, 50 cents. So they can drop a lot still, even at $1.92. DD is, tell me this isn't lower. It's so bearish. It's a sell setup plus a 1, 2, 3. Looks lower. DD. EZPW, I've been watching it. I called it a few times for the newsletter and for myself too. I take every play that I call, but it wouldn't trigger. I called it 2-3 times at least. Wouldn't trigger, and then on Thursday it broke out, and on Friday that breakout failed. Kind of like CN. Remember CN? We talked about it. Here we said it broke down and failed. The breakdown actually failed to follow through. It went back up. When the more bearish a pattern is, the more bearish a breakdown is, the more bullish the stock becomes when it fails on it. Does that make sense? So let me say that one more time. The more bearish a pattern is, the more bullish the stock becomes when that pattern fails. Likewise here, the more bullish a breakout is. This was kind of a bullish big green bar against the bearish market on Thursday. The market was selling off. The more bearish it became when it failed on it. So I really do like the XLearn. The problem with that breakout failure is now it's a bigger stop. Our stop was going to be over $5. Now it's over $5.15. So that adds 15 more cents to the stop, which means it reduces the share size. But I do like the EZPW lower still. IMAX is probably one of the weakest stocks that I know of on the monthly chart. Check it out. It's based for like a number of years, 1, 2, 3 years almost, and just broke under. That's the monthly chart on IMAX. Just broke under it, so it looks lower. It looks really, really lower. Next support area would be around 12.57. It's at $17, 16.90. So it's got a good amount of room to drop. The pattern on the daily isn't very good, to be sure. It's a little sloppy. The tighter a pattern is on the daily chart, the bigger the drop usually. So that's not a very tight pattern. But I like the larger picture, the monthly chart. So I like the IMAX lower. NSP is a sell setup. NSP was one of my best plays as an earnings play this quarter as a short. It gapped 25% maybe or so, 27%. I don't remember the exact amount, but was one of the best. And now has a sell setup. I don't love the sell setup, but it's a sell setup. It looks okay. TERP as a climactic short. So up, 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 up. We got sort of a wide range bar there, and then a nice battle bar is what I like to call it. And now if it breaks under $21, it looks lower to like 20, or could also drop to the rising 20. It actually looks lower to the rising 20, but I'm expecting the 20 by the time it drops, that it will be around $20, maybe $19.50. So I like the TERP short for sure. Tesla also is a climactic short. Now hear me out on Tesla, okay? I'm not a Tesla hater. Okay, I'm not at all. I like Tesla. I like the company, but this could be a double top. See this run up, the climactic run up, and then the retest and the double top. So I like it short under the base here, under 880. This bar is low. So right here under the base, stop over 913. It has shown a lot of bullishness the last couple of days because it's so extended. and the market dropped a good amount, right? And Tesla wouldn't drop. So I was very, very impressed. But if it breaks under 880, I like it lower. I think it's worth a shot. To $800, and then target two would be 750 or so on Tesla. So I like it, but only if it breaks under 880. Okay, I have 25 shares already in it short. I know, very small, but for Tesla it isn't very small actually, 25 shares. But I'm gonna kill it if it pops, and if it drops under 880, I will be adding to my position in Tesla. Okay, so that's Tesla. WLK is a sell setup into the declining 20, and then just a sell setup, and then ZGNX is a breakdown. So if you look at it, it's just a base breakdown. Had a really bearish gap down and is basing at the bottom. Again, remember what I said. The tighter pattern is, the better it usually is. Okay, the tighter it is, the better. So that's not a very tight pattern. Okay, but it's really weak. And if you look at it on the larger time frames, look at the monthly, it has no support. No support all the way down to $10, 10 or 15. So I like it lower. ZGNX is completely destroyed on the monthly chart. All right. Okay. Well, my friends, that will do it for this week, for today. Remember, I'm going to be out on Tuesday because I'm going to be with teaching the mentorship class, which is in person. So I'm not going to have the time to do our regular weekly Tuesday lesson. But I'll be back next week. I will go ahead and drop a link to last week's lesson, which in my opinion was one of the most important lessons that I ever did. So be sure to check it out. And if you have any questions, reach out to info@t3live.com. If you've never been a part of my room, the Strategic Day Trader room, which is for day trading, or the Strategic Swing Trader newsletter, which is for swing trading, be sure to check the links in the description below. You can get in for just $49. $49. So links in the description. But for now, I am done. Hope you have a good rest of the weekend and a great trading week next week. I'm Sami Abu Saad of T3 Live. Good trading, everybody. Take care.